What is going on, guys? My name is Family Shucks and welcome back to another video. So in today's episode, it's going to be kind of a candid talk because I wanted to talk more or less about my thoughts on where I want to take my portfolio in the near future. Because as much as I do love to talk about, stock analysis about certain companies and my thoughts on the market, at the end of the day, these videos that I produce and also the channel is kind of a personal documentation for myself on my investment journey. Something that, in the near future, I can look back on and be like, wow, I literally didn't know anything. And just kind of see where my knowledge has evolved up until that point. Am I making the right decisions? Am I making the wrong decisions? Who knows? But for what it's worth, ever since I started investing last year, it's been a big learning curve, I started my first job right out of college and then just hopped right into learning about finances, learning about money, and ultimately learning about investing. And I think the main thing that I kind of developed over this past year and kind of the foundation of my investing strategy that I will hold on for the rest of my life is value investing. Learning from the big dogs like Warren Buffett and Charlie Munger, the Oracle of Omaha, and essentially kind of learning the ideas and ideologies of value investing, buying a stock that is currently undervalued and knowing that because of how strong the management is, how strong the financial health is, and also the growth of it in the near future, it will hopefully be worth double or however X multiple in the next 5 to 10 years. Kind of that buy and hold strategy. And I would say on top of value investing, I do basically do index fund investing as well, which is the main technique that I follow within my retirement accounts. And as much as these buy and hold strategies are very entertaining, I can't help but be exposed to subreddits like Wall Street Bets or our options, because ultimately, as big as this investing world is, there are different types of investors or traders. It depends on how you want to distinguish them, because obviously they're the people who buy the stock and kind of hold for however long, and then the people who trade. As funny as it is to read the lost porn and all the shit posts and memes on Wall Street Bets, there are a lot of smart people on this subreddit. Maybe I'm giving those autists a little bit too much credit, but at the end of the day, they know something that I don't, which is options and all that stuff. Like I said, as much as I do love to read the shit posts and have a good laugh, they are teaching me something, and at the same time, it's kind of opened my eyes to a new world of investing or trading. I don't really care. Ultimately, as someone who is still in the beginnings of their kind of investing career, I do want to open my horizons to new ways to increase my portfolio value and also find other techniques to kind of make money. And with that being said, Wall Street Bets did kind of expose me to the techniques of Theta Gang. Now, Theta Gang, the way they kind of, contrast with the people or the autists of Wall Street Bets is with Wall Street Bets, they're kind of high risk, high reward. And with Theta Gang, they kind of do their own technicals and stuff like that. But what it boils down to is that they kind of have more low risk, low reward, but it's consistent. And the fact that it's consistent gains with not as much losses ultimately is what attracted me to their kind of teachings and techniques and all that stuff. Imagine, it's kind of like the analogy, would you rather risk everything and hope to get $1 million, or would you rather just make slowly $100 every week until you make $1 million? And the overarching kind of strategy that they introduced me to was called the wheel. And it basically involves selling covered calls and selling cash secured puts. Now, for the purposes of where I want to go with my portfolio, which kind of brings everything together from what I was talking about before, is that I want to start selling options, but mainly focusing on the wheel strategy. Now, a lot of people use the wheel strategy to essentially rack in some extra income due to the premiums. Because when you're selling a covered call or selling a cash secured put, you're receiving a premium from a buyer, basically saying, if your underlying stock meets a certain strike price at expiration, I have the right to buy those 100 shares from you by putting a bid on those 100 shares, which essentially is the premium. And you can sell these options weekly or monthly and reap in premiums just from you owning 100 shares of a certain stock. And essentially, by doing this strategy of the wheel, it's a win-win scenario. Based off of my brief research, there really is no loss with this strategy. Maybe for covered calls, if you're selling covered calls, I guess the only major loss is if your shares or the underlying shares tanks and goes to zero, right? But hopefully, as an experienced or at least beginner investor, you're not buying shit companies that is going to go to zero. You're going to hopefully buy companies that appreciate in value. But what I want to do is eventually sell covered calls. So what I did this weekend is that I put in an application in my Fidelity account for my Roth IRA to basically say that I want to sell covered calls and cash secured puts. So eventually, hopefully, when that application gets approved and when I am able to get 100 shares of a certain stock, then I'll be able to sell covered calls and reap in some premiums. But that comes to another point. What stock am I going to choose to sell covered calls on? And I think this is the fan of many investors, is AT&T. Because not only is AT&T a very high dividend blue chip company, always increasing their dividends every year, but at the same time, they're a very stable stock. I think the fact that it's stable and it doesn't move, it's not very volatile on a weekly or monthly basis. In the past 3 months, it basically stayed under $30 for a better part of 2 of the 3 months. And within that time frame, you could have been selling some weekly cash covered calls, collecting some premiums on a weekly basis or monthly basis, and using that extra income to either reinvest into the stock, so that way, 1, you can get more shares of AT&T, but also 2, you can also get more dividend when it's time for the dividends to pay out. So you can see why something like this is really appealing to me, because you're building your portfolio not only in shares but also in dividend amounts, which can then be reinvested and then compound the value of, for my purposes, my Roth IRA. And over my entire investment horizon, that will compound to hundreds and thousands of dollars by the time I want to retire, and by that time it will be a nice source of fixed income at my retirement age. So yeah, like I said, AT&T pays a fat dividend every single quarter at 52 cents per share, and when you're selling weekly premiums, or at least I anticipate myself to be selling weekly premiums, I can then use those small amounts over time to reinvest back into AT&T, build my shares so that I can sell more contracts to receive more premiums on a weekly or monthly basis, but also those shares eventually can earn me more dividend income. So out of curiosity, I kind of want to get an idea of the weekly premiums I would receive if I decided to sell covered calls at this very moment. At the time right now, I don't have 100 shares in my Roth IRA just yet, and the reason being is because 1, I already maxed it out, and 2, I don't want to sell any of my funds or stocks in my Roth IRA right now to free up some cash to buy AT&T, because ultimately I can wait, because I don't really think AT&T is going to go anywhere by the end of 2020. So by that time, when the new year comes around, I can put a little bit more money into AT&T to build my shares, and then I'll start to sell some options on it. But regardless of that fact, I want to look at some weekly calls that I could potentially sell on these hypothetical shares that I have at the moment. But the main thing I want to do is that because I like AT&T, I want to keep it for the long haul. Right? I know they say if you want to sell covered calls, do it on stocks that you don't mind giving up, but me being very frugal and cheap, I would prefer not to sell it, but knowing AT&T, it's not going to go anywhere, so it's still going to be at a relatively low price that I will happily buy back into, because I'm pretty sure it's just going to hover around $30 and $31. But regardless of that fact, the main thing that I want to be able to do is essentially sell out of the money weekly covered calls. And what that looks like is, it seems like, say AT&T is currently at $29.69, and it looks like someone is willing to pay me at a strike price of $31. They are willing to pay me a premium of between $2 to $3 for essentially the right to buy my 100 shares if it ever hits $31. Now, you might think, $2 to $3 is chump change. While yes, I agree, but on a weekly basis, if you're always selling out of the money calls on your underlying shares for an entire year and it's with a stock that is very low volatility, that's easy $2 to $3 from doing nothing. You just opened up a contract on your 100 shares and you're just receiving $2 to $3 for doing nothing. And from where I am right now, I'd rather just take the $2 to $3 and just know that I'm going to keep my 100 shares of AT&T. And I just did some quick math on it. This isn't 100% correct, but obviously we know that there's 52 weeks in the year. And if I'm consistently selling weekly out of the money calls on my shares of AT&T, I'll eventually receive an annual premium of $104, which can ultimately be reinvested back into AT&T and buy me at least 3.5 shares of it just by collecting people's premiums. So that's 3.5 shares of AT&T from doing nothing, from just opening up these contracts and being like, I will sell you 100 shares if it meets this very out of the money strike price, because it's AT&T, it's not going to go anywhere. And that's on the low end. So that's if it's only $2 of weekly premium. But if I was able to get $3 of weekly premium, that will equate to $156 of annual premium, which can then buy me 5.2 shares of AT&T. So regardless, I'm just taking free money from these people and just reinvesting it into myself. And ultimately, I know 3 and 5 shares isn't that much, but like I said before, if you reinvest it, the dividends will compound back into the stock and you will grow your portfolio exponentially. And that is the reason why I want to get more into options now in the incoming future, because I realize if I just stick with buy and hold, right, I will still see safe gains. However, I can also capitalize on other parts of this investing realm and make other forms of income, right? Because if it's available, you might as well take it. Might as well expose yourself, trial and error. I'm young, I'm 22, about to turn 23 soon. I got 50 years left in me. What is a small mistake early in my career gonna do? Anyways, that was a pretty candid talk of kind of the future of where I want to take my portfolio. I want to get into option trading. I want to focus on the strategy and techniques of Theta Gang, specifically around the wheel strategy, where you're selling covered calls and cash secured puts. And eventually when I get older, when I have more money, maybe I'll start dabbling into more high risky plays and throwing out the YOLOs so I can make a name for myself on Wall Street bets. With all that being said, thank you guys so much for watching, and I will see you guys next time. Peace.